Well, hello everyone. Welcome to your Daily Five. I'm Joe Duarte, editor of Joe Duarte and the moneyoptions.com and author of Trading Options for Dummies and Everything Investing in Your 20s and 30s. I have great news before I start. The fourth edition of Trading Options for Dummies is going to be out on September 28, 2021. Now available for pre-order at Amazon, Barnes & Noble, and coming soon to a bookstore near you, especially StockCharts.com bookstore. Also get a subscription to my website if you like what I do. Let's get started. Today I want to talk about top-down sector analysis and looking at some winning turnaround sector strategies. So as usual, we'll start with our quick overview of sound trading principles. You don't want to fight the Fed. The Fed is the thing that drives the trading, and when interest rates are low, stocks find a way to go up. You don't want to fight that market's momentum, which is directly related to the Fed. And you want to look at things that are happening on the ground and around you as well. I'll talk a little bit about that in today's talk. So stick with those strong sectors and stocks, trade in small lots and focus on your stocks relative to the market. If your stocks keep going up, market's dropping, stick with your stocks. You get 20% gainers, please take some profits off, cut your position in half or a quarter, whatever your risk profile suggests, but take some money off the table. You never let a winner turn into a loser. If a stock gets volatile and starts dropping and you turns into a moderate loser, get rid of it no matter where your sell stop is. Otherwise, sell stops 5 to 8%. Monitor those lagging sectors for potential turnaround candidates. That's what we're going to talk about today. Manage that cash wisely. Don't be in a hurry to get back in anything when you get stopped out. Okay, big picture of the market, uptrend. New York Stock Exchange advanced decline line above 50-day moving average. The RSI is back above 50. It dropped below 50. Market got very dicey, but the moving average held up. So just always keep in mind, as long as we're above that 50-day moving average with the New York Stock Exchange advanced decline line, you're in complexity zone, which is good. Chaos zone is bad. Edge of chaos is where things percolate and stocks pop. All right, let's look at a really downtrodden, beaten up sector, the lumber stocks. And first thing you want to do, and this is John Murphy Classic 101 technical analysis, if you're in a sector that has a commodity connection, you want to connect the stocks to the commodities. So this is a perfect setup. So first thing you want to do is look at your commodity and what's it doing. First thing, of course, lumber, it's economically sensitive, interest rate sensitive because it's related to housing, and it can be a value play. So where's lumber now? It's in a huge bear market. It's lost a significant amount of money, but it's starting to turn around. And you can see that in accumulation distribution. The short sellers are having a great time here, making money. They're starting to give it up. As you can see, accumulation distribution turning up, unbalanced volume starting to turn up, prices turning up. This is actually a pretty interesting thing here, and it's a little bit cautionary. We've had a double bottom in lumber. The second bottom is up, but the second bottom in RSI is not higher than the first one. So we may still have a little bit of work to do. But always keep in mind, you want to look at the commodities. So let's move on to the stocks. Here's kind of a bellwether for the lumber sector, Weyerhauser. It's basically a lumber farm. They grow trees and they have lumber mills and they sell them to wholesalers like Home Depot. So you want to look for confirmation of the trend in the commodity. And in fact, the classically described situation is one in which the stocks turn around before the commodity does. And in this case, they're actually right. If you remember the lumber chart, only recently started to turn up. The stock here, Weyerhauser, bottomed out. And you're seeing the same sort of pattern. Short sellers, accumulation distribution, and unbalanced volume, both starting to turn around. So some money's coming back in. The stock did hold up above that 200-day moving average. And here, as in opposite to what we saw in the lumber chart, the first bottom hit a low of 30 on RSI. The second bottom had a lower price with a higher bottom in RSI. And that's bullish. That's called the panic bottom. First one is the momentum bottom. And you want to see a lower price on that panic bottom, but a higher RSI. So right now, the stock is likely to back and fill some. It's recently had some trouble at the 50-day moving average. Okay, you want to consider some trading strategies here. And so you can buy the stock, probably not the best thing to do at the moment, since it's going up and down some. If you have a long-term time frame, you can buy a few shares. You can consider an option strategy, which is you may want to buy a call if you're bullish, or set up some kind of spread where you cut the risk, or you can do a combination stock and option strategy. Okay, so I want to just kind of make sure that we look at more than one stock. So you look at Louisiana Pacific, which is a similar company to Weyerhauser, and here you see a little bit of a better setup. This stock is rebounding better than Weyerhauser. And you can see the same general thing. Accumulation distribution is starting to improve, on balance volume improving, and somewhat similar RSI double bottom setup here. Okay. So again, you want to buy this stock? Well, this one looks a little better, so maybe you want to buy this stock. Or you can use an option strategy, again, or a combination. And let's talk about the combination stock, because this is a good enough setup for it. And so I want to talk about selling covered calls. I've talked about this before, but when you're looking at a beaten up sector like this, you want to consider this because it buys you time. Okay, it's best suited for flat markets or stocks and consolidation patterns such as this one. It's an income opportunity. You're going to sell an option and you're going to get some premium. So you're going to pay yourself for being patient. And of course, you want to set those exit points. You can do sell stops. You can do some trade management of the option. If the stock starts rising significantly, you might want to buy back that option and just let the stock ride. So remember, when you sell a call, it's also known as a buy right, and that is a stock in a consolidation pattern. Yes. Is the historical volatility the implied volatility above the historical volatility? A little bit of a misprint there. In this case, implied volatility is higher, so it does, you do check off that box. Okay, and if you were going to do this, you'd buy 100 shares of the stock, and you would sell a slightly out of the money call option with 45 days or less to expiration. And that's because you want that time value to erode so that premium stays in your pocket, because no one exercises the option against you. So this is a quick one, but I want to recap. Okay, when you're considering a turnaround sector, you want to check out if there's a commodity connection, because that gives you more information and it gives you something visible. Okay. And you want to analyze that status of that commodity. In this case, lumber seems to be bottoming out after what is clearly a devastating bear market over the last 3 or 4 months. You want to check for the confirmation of those related stocks. And we looked at Weyerhauser. Weyerhauser is in a consolidation pattern. We looked at Louisiana Pacific, and it is also in a consolidation pattern. Of the two, Louisiana Pacific looked a little bit more attractive. And then, of course, you want to decide on a best strategy. So in this case, if you were going to buy the stock, you might choose to buy Louisiana Pacific. You can do an option strategy. You can use call options on both, or you can do a combination strategy where you buy a stock and sell the call, and in that way you would generate some income and be paid for being patient. That's all I have for today. Thank you for listening. I'm Joe Duarte, the author of Trading Options for Dummies. Remember, the 4th edition, out September 28, 2021, now available for pre-order. Consider a free 30-day trial subscription to my website if you like what you see. And it's kind of a cool thing here. The 4th edition is going to have an audiobook component. So if you have a long drive and you want to check out some options activity, go ahead and consider that when it's available. Thank you for listening, and we'll talk again.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.